You did warn that rising rates from the Federal Reserve too fast could be a harmful impact on the economy. Do you think they can get away with 2 more increases this year?
That's for the board of the Fed to decide. But 2 things on that point. One is, if rates increase, it's a clear signal that the US economy is doing better. Inflation is up, unemployment down. This is encouraging, and it's encouraging for the rest of the world. If it moves too fast, that's where we might have risks, because capital flows will move back from these emerging market or low-income countries where they are at the moment into the US market, and that could precipitate some disorderly adjustments in those other countries. So let's hope that it proceeds in a smooth, well-communicated and orderly manner, as fact-based as possible, as has been the case so far.
You've also warned, and this has been your continuing message, of rising protectionism and barriers to free trade. Did hear from Commerce Secretary Wilbur Ross earlier this week calling that rubbish, that the United States shouldn't have to deal with a trade deficit while everyone else has surpluses.
Well, let's look at the deficit separately. But you know, when I hear that, I'm delighted, because it means that the concern of all our members is to make sure that we protect free, fair and global trade, and that we all work at eliminating the distortion, at eliminating what could constitute a playing field that is not leveled and accessible to all. So we're on the same page.
But is the trade deficit the right measure?
Well, trade deficit is an indication of something else as well, and you have to look at the current account at large, and it's also an indication of how much saving, how much investment. It's not just in isolation the trade deficit.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.